Intel's new microchip gigafactory is a $100 billion monolith of construction located just outside of Columbus, Ohio, in the new Silicon Heartland. This facility, once it comes online, is going to be the largest semiconductor plant that Intel has ever built, and supposedly one of the largest semiconductor plants in the entire world. And it has a lot of people here in Ohio wondering what effect this facility and the development's going to have on the area. And where will real estate prices go? And since I'm a real estate agent and investor, and I live 10 minutes from where this facility is being constructed, and I grew up in this community, I certainly care. And if you're someone who's thinking about moving to Ohio, or you live in Central Ohio, or just want to find out what happens when a big company like this comes into a farming community and sets up shop, this video is for you. And that's what we're talking about today. We're talking about the Intel facility and the effects it already has had, and will have on real estate prices. All right. Thanks for joining me today. Let's get going. And make sure you watch this entire video, because I'm going to share with you several tools and tactics I use as a real estate professional when I'm helping my clients or looking for an investment property. And they're tools you can use yourself if you're looking to buy and sell real estate or invest in real estate here in Ohio or almost anywhere. All right, let's get going. All right, so we're going to look at several data sets. The first set is a historical look back over the last 10 years at what the housing market has done here in Central Ohio. And then we're going to look at what has happened since Intel made their announcement in January of 2022. And take a look at those two data sets and say, hey, have home prices exponentially increased since then? And then that may give us a clue as to where home prices will go. Okay, so I said I would share some of the tools I use, and this is the first one. So to look at the data, we're going to use Redfin real estate data, and you can go to their website anytime you want. They have a ton of free information, free articles. You can download their information and like dump it into Excel and, dissect it yourself. Sometimes I do that, being the data geek I am. But I'm on their site right now, and follow along with me if you want. You can actually go in there and look up your hometown, your city, your state. You can even look down to the county level if you want, which is pretty cool. So I'm on their data center, and now I'm at the monthly housing data. I already have this filtered ahead of time for Columbus. You can see that here, the Columbus metro area. And I'm looking at only single family residences. That's what I'm paying attention to. So first thing we're looking at is where home prices have gone over the last 10 years. So back in January of 2014, that's where we'll start. The median home price, and that's what we started with here, the median home price is $135,000. Pretty good deal. It'd have been nice to buy a house back then, right? Well, now that price, flash forward to January of 2024, that price, as you can see, is $320,000. So January of 2014, $135,000 for the median home price here in Central Ohio. Now that number is $320,000. That's an increase of about 137% in the last 10 years. Now let's also look at how much home prices went up from January of 2014 to January of 2022. In January 2022 is when Intel announced their project. So again, started at 135,000. And now in January of 2022, we're at $280,000. So in that time span leading up to the Intel announcement, property values increased about 107%, or about $145,000. Now let's look at where they have gone since Intel made that announcement. So Intel made the announcement when prices were $280,000. And now the price, we know, $320,000 in January of 2024. So that's an increase of about 14%, or $40,000. Just in 2 short years, the prices of houses went up 14%. Pretty shocking, right? So Intel has definitely had an effect on home values. Now, because of COVID and because of the pandemic, we saw home values across the United States shoot up, no doubt. But now it's hard to understand, did Intel really have that big of an effect? Well, it looks like the spike is higher since Intel made the announcement than it was before then. However, they really made the announcement kind of at the tail end of the COVID situation. So it's really hard to figure out, hey, did Intel really affect home prices? Remains to be seen as we go forward. but they certainly didn't help the situation with unaffordability in housing. So now we know where prices have gone. Let's look at supply and find out how much supply we have currently in the market. In this same data set, I can look at supply. I just have to click on a different chart. So up here, I can see active listings. And that's what I'm going to click on. How many active units are for sale right now in single family houses? Back in January of 2014, we had 7,815 homes for sale. Flash forward to today, we have 4,278 homes for sale. A clear decline in the active listings, and less supply generally means higher prices as long as demand stays the same or, heaven forbid, goes up. Let's also do something and look at months of supply. So months of supply measures how many months we have of supply if we stop adding new listings. So if we say we're not going to add any new listings at all, no new houses are coming on the market, how long will the current inventory last? How long will it last? Well, that's months of supply. So back in January of 2014, we had 5.4 months of supply. Now, you need about 5 months of supply or so to have what people call a balanced market. Actually, I define it as 4 to 5 months, all the way up to 6 months is a balanced market. Anything under 4 months is actually a seller's market. And then after you get past 5 months and into 6 months, it becomes a buyer's market. So back in 2014, we had 5.4 months of supply, more of a balanced market. Now, let's go to what's happening today. Right now, we have 2.4 months of supply. So we still have a seller's market in Central Ohio, meaning months of supply has not really increased since then. It's actually gone down. Now, it has gone up slightly in the last, as you can see, the last couple of years, it's gone up, which is good, need more supply, but it's still nowhere near where it has to be in order for us to have some type of market correction or crash. It's certainly not even balanced, and it's not a buyer's market either. And again, I have this link in my description below. Really encourage you to go in, check out this info for your own area. And this is a tool I use all the time as a real estate professional. All right, now let's look at new supply, new listings that are hitting the market. So these are the number of new listings that hit the market. They break it down every month, kind of like they did active listings. So back in January of 2014, we had 1,521 new listings hit the market. In January of 2024, we had 1,400 new listings hit the market. So when you look at the number now for new listings and compare it back to January of 2014, it's actually just slightly under, maybe by like 100 units. Not that far off. The problem is a lot of houses that are coming on the market right now are not houses that a lot of people snatch up quickly. The affordable houses that are move-in ready or livable anyway, those are still very hard to find. Luxury houses are definitely flooding the market, and houses are sitting around that need, new roofs, foundations, or in areas that people maybe don't want to live in. Okay, so we know that months of supply, active listings, those are down. We see that new listings are improving some. That certainly helps. And we know that prices have continually gone up. So we know prices, now we know supply. Let's look at demand. How much demand's on the sidelines, or how much demand could come into the area? So the first thing is we have to understand that the Intel project is bringing in approximately 13,000 to 20,000 workers just to construct the facility. And then you have 3,000 to 5,000 workers that will work there at the facility full time and live in the area. Not only that, you have a ton of companies that are coming in to support Intel, whether it be plumbers, electricians, restaurants, hotels, gas stations, tons of people, tons of businesses coming in to support the Intel facility. So upwards of 20, to 30,000 people could be coming to a little community that only has 50,000 people to begin with. Yeah, crazy, right? So a lot of these folks are going to have to live far out in the country, or they're going to have to move to Columbus. I know of some people who have came in to work for Intel that are living like an hour and a half and 2 hours away. But something you have to remember, where I live now, where this Intel facility is, traffic is really non-existent. I mean, you may sit in traffic a little bit here and there, but nothing like you do if you're in like Houston or Seattle, like in King County, or if you're in Los Angeles County or New York. Traffic is completely different, right? So here, if you're driving in your car, an hour, hour and a half, not a huge deal to a lot of people if you're used to sitting in gridlock rather than just driving down a country road. So if you're thinking about moving to Ohio, or if you live in Ohio already and want to move closer to the Intel facility, I would look at a lot of the areas surrounding Intel and not necessarily the community right next to Intel, because there's just not a lot of housing there. Okay, so we know that Intel's bringing a ton of workers, but the population projections for the area are staggering. Check this out. So I found this article from the local news station, and it's titled "Columbus Population Grew Faster Than Any City in the Second Half of 2023, study says." So I'll read a little bit of the article and then we're going to go into the data. It says Columbus grew faster than any other city in the nation during the second half of 2023. The population of Ohio's capital grew by 1.1% during the third and fourth quarters of 2023, earning the top spot in a new Bank of America Institute ranking. The Institute collected U.S. Census data and Bank of America customer data to provide a more real-time estimate of population trends. Pretty cool. Austin, Texas was ranked second place, and San Antonio, Texas was ranked in third for both quarters. Jacksonville, Florida placed fourth in quarter three, while Las Vegas placed fourth in quarter four. Tampa, Florida placed fifth in quarter three, and Jacksonville placed fifth in quarter four. Got all that? So overall, the post-pandemic story of people leaving the West and Northeast continues, the report stated. We see continued growth in the population of number of southern metropolitan statistical areas such as Tampa, Jacksonville, San Antonio, and Austin. By contrast, the Institute said many cities in the West and Northeast are still seeing declining populations, including San Francisco, Los Angeles, New York, and Boston. Columbus is the singular outlier, the report showed. Relative housing affordability remains a key factor driving these differences in population changes. In the West, the Institute argues, where a city has a relatively high median mortgage payment, its population growth has usually been negative or at best weakly positive. So affordability is awesome right now in Columbus compared to many areas of the country. However, a lot of locals here already feel like the housing market is way overpriced and ridiculous. I'm not going to argue that it's not, but what I will say is, having lived in many areas of the country, I can tell you houses here and property, it's cheap. So a lot of people moving in here from New York, Los Angeles, San Antonio. I have a neighbor who actually moved in from Austin, and I don't know their financial situation, but I do know that, like, if you're selling a house at 800 grand or $1 million and you're moving here and you're buying a house at 3, 5, 600 grand, there's a savings there and it's affordable. So that's what the article is saying. Columbus is affordable. People are recognizing that. So in the article, they link to the study from Bank of America, and there's some pretty interesting data in the study. Let's review that. So this is the Bank of America Institute study they did, really about, it's called On the Move West Side Story. They talk about how migration is shifting and people are moving away from more expensive areas into more affordable areas. So I'm going to skip a lot of it and just show this chart here, because I thought this was like really telling. So this chart tells us the population rate of change, either positive or negative. So positive would be bars to the right, negative would be bars to the left. So you can see, if you look through this list, areas like San Francisco, Los Angeles, New York, Miami, Boston, DC, St. Louis, heck, a lot of these, Orlando, Chicago, Atlanta, they have negative population growth for 2 quarters at the end of 2023. Pretty surprising. Now let's look at where the positive numbers are. There actually aren't many, but it'll surprise you, the cities that are growing in population compared to some of the bigger metros out there. So you've got Philadelphia, Tampa, Jacksonville, Las Vegas, San Antonio, Austin, and the number one spot, like they said in the article, is Columbus, Ohio. So looking at this list, I mean, there really isn't a Midwestern city, I suppose, that is growing like this, like Columbus. I mean, it's a complete anomaly. They're right. You've got Austin, San Antonio, Las Vegas, and Jacksonville behind Columbus. Columbus is clearly number one, and this demand will certainly affect home prices, because more people moving in means more demand. And since we have less supply right now, it's going to certainly drive up prices. Wouldn't you agree? Comment below if you do. Even if you don't, comment below. Now let's go back to the article real quick, because there is some information here that I thought was pretty cool. Bank of America's report comes shortly after the Mid-Ohio Regional Planning Commission announced it is projecting that Central Ohio's population will exceed 3 million by 2050. Franklin County, which is where Columbus is expected to absorb half of the regional growth and will welcome more than twice as many newcomers as Delaware County. So Delaware County is located just north of Franklin County, and it's actually one of the more expensive areas in Ohio. I think it's actually has one of the more expensive median home prices for a county in Ohio, but it's saying that Franklin County is going to grow faster. I would also say there's probably going to be a lot of population growth in the county I live in, which is Licking County. Funny name, right? Well, I think it'll happen here locally in Licking County because of the Intel project. Now, the problem is, again, there's no supply. The last thing I'm going to show you is the amount of new building, because we haven't looked at that yet, but we need to. So you can go to Redfin and actually look at the amount of new construction in your area. Now, I don't know how accurate this is necessarily, but I think they try to capture as much as they can. You can also go to Fred Economic Data, but I'm going to stick to Redfin right now because we were already on their site. So at the top here, you can see it says new construction and investor data. I'm going to click on that. It'll give me the amount of investor purchases, which we'll skip. That's for another video probably. But we're going to look at new construction. So I'm going to go in and actually find my market. There's Columbus, Ohio Metro. I'm going to look at single family. What you're seeing, the red line is for new construction. The blue line is for existing homes. It shows you the median price. And it doesn't, it's not all the way up to date. This actually ended in March of 2023. It says median sale price in new construction was $482,000 here in Central Ohio. And for existing, the median sale price back in March of 2023 was $300,000. So definitely a massive difference in new build pricing. I think that tells a big story because in a lot of metros, new house prices, while they're not necessarily cheaper than existing homes, they're somewhere in the neighborhood of a lot of existing homes with pricing. At least that's what I've seen. Comment below and tell me if I'm wrong. But here, there's a huge spread between new and existing homes. A lot of that has to do with the fact that our inventory traditionally in Columbus, Central Ohio, and surrounding areas is older inventory. You know, a lot of times you're looking at houses from like 1900, 1920, 1950 may be considered newer. But because there hasn't been a lot of new construction historically here in Columbus and Central Ohio. So this is the median sale price, but let's look at homes sold. How many sales were there of existing versus new? So let's look at March of 2023. We had 1,500 home sales in existing houses, not a lot. And in new construction, we had 293 homes sold, still not that much. And now look at inventory. So you can see the inventory of homes for sale in existing homes is woefully low. In March of last year, we had 2,200 homes for sale. And in new construction, last year, we had about 489 homes for sale. And now for a second, I'm going to look at building permits because a building permit tells us how many permits are being pulled for new construction. Obviously not existing homes, but new construction. So, I mean, look at this. It has not really kept up with demand at all. I mean, December of 2022, we have February of 2023 at 331 total units, permits being pulled, just not a lot. So if we have 20, 30, 40, 50,000 people moving into an area over the next few years, and as many as 3 million, over the next couple decades, and our pace of new construction is what you see, we are not going to keep up with the demand, and that's going to continue to drive home prices upwards. And if you're coming in to work for Intel or you live in Ohio and you're wanting to move maybe to the Columbus area or move outside the city, there is a lot less supply outside the city than there is inside the metro areas. So a lot of people are looking to buy some land, 5, 10 acres and put their dream house on it. That's an option, but it's also an expensive option compared to buying an existing home or sometimes even new construction in a subdivision. Anyway, the point is we need more supply and we need more building. Okay, so I told you I'd give you some more tools to use that I use as a professional, and this is the next tool I'm going to provide. So you can go to my website, which is jasonferrier.com. Now, I only have my license in Ohio, so this is really only Ohio data, obviously, that I'm going to show you. But every month I put out what's called a market status report. And this report, there's a link right on my front page that you can use. And this is what the report looks like. And I create this every single month to show my clients and the marketplace where the potential buying opportunities are or what the market status is per school district and price point. That's really important. So if you live in Ohio, click on this report and you can use it for the Central Ohio analysis. But if you don't live in Ohio and you don't care about Ohio, you could still click this, download this chart, and send it to a local real estate professional in your area and have them run this same report for you. Now, it's not quick. It's not something they're going to do in 2 minutes, but real estate agents should be able to do this type of work for you. And if they can't, find a new agent. If they need help, tell them to call me. I'll be glad to share how I create my chart. What I do is I go into each school district. You can see on the left, I go to the school district. At the top, I break it down by price point. I even include the median sale price for that month. So this is called the February 2024 residential market update or market status report. And so we're looking at really January data. So I have the status on here color coded, and I have it categorized by either a seller's market, a strong seller's market, a balanced market, a buyer's market, or a strong buyer's market. And so when you see a seller's market, that basically means sellers are in control at that price point in that school district. And it helps to break it down by school district and price point, because if you just say school district, that really depends on what price point you're looking at will determine what the market status is. So for instance, take a look at Southwestern City Schools here in the Columbus area. It's a strong seller's market in the $100,000 to $200,000 category, 200 to 300,000, 300 to 400,000. But in the $400,000 to $500,000 category, it's a buyer's market because there's more months of supply. It's in balance in the $500,000 plus category because we have a good amount of supply and demand to balance out the market. And I call a balanced market anything 4 to 5 months. Then I'll scroll down here to like an area like Johnstown. So you can see Johnstown, which is actually right next to Intel. It's probably the closest town next to the Intel project. And it has a couple of new housing developments, but everything else in the market in that area is either not for sale or it's old. So right now, Johnstown, there's no listings or sales in the $100,000 to $200,000 category. There's a seller's market with $200,000 to $300,000 houses. If you look all the way to the $500,000 plus category, it's a strong buyer's market because they have a lot of new construction, but no existing homes for sale that are less expensive. So the more expensive homes in that city happen to be new construction. I think right now there's a good amount of them. I think there were like 30 or 40 that I saw. So that creates a strong buyer's market. Anyway, this chart can certainly help you, and information like this can help you if you're buying, selling, or investing in real estate. Wherever you are, I would have a realtor pull data like this for you by price point, by school district, or maybe subdivision, or even, zip code. They can break it down any way they want. Okay, so in conclusion, it doesn't look like prices are going to fall anytime soon here in Columbus. Now, there is going to be some seasonality up and down, but if the demand stays high and increases like they say it's going to, and if the Intel facility continues to move forward and it's not canceled for some reason, then demand should continue to increase. That's probably going to drive up prices because the supply simply isn't here unless the supply fairy comes along and waves the magic wand. Anyway, if you are thinking of moving to Central Ohio, please do me a favor, reach out to me. I'm happy to help in any way I can, either with home information, with market information, with living in Central Ohio. If you have questions about school districts and best neighborhoods to live in, hit me up. I love stuff like that. So until next time, thank you for watching. Make it a great day, and we'll see you on the next video.